All right, everybody, let's do a little bit of a breakdown over here. It was oh, wow, look at that. That's nuts. It just fell about 24, 25 pips. That is crazy. Anyway, let's talk about all the things that we did here today, right? So starting off with the first one. So this was a sell early morning, maybe pre-London, a little bit before pre-London or within pre-London. Let's see what time was this. This was around 10. This was around pre-London. So I took a sell right over here. I took a sell because if you look on the 30-minute time frame, let's zoom in. The 30-minute candles were this one closed strong bearish. So I was under the indication that, okay, if this has closed strong bearish, so there's a very high probability. Okay. So there's a very high probability that we can continue to push down, right? So, it moved down. I put my stops at break even, and basically, that got stopped out. Now, there's one mistake that some people made was they're like, okay, well, the 15-minute candle has, let's say, so we have the support. The 15-minute candle has closed bullish, so they took a buy as the next candle broke above the high. But the problem with those buys were very simple. The range was, it's like a 17, 18 pip range. It's a very small range. It's not like you have this wick to the left-hand side. It's just right there. Like your clean range is like 16, 17 pips. Even you look on the 30-minute time frame, this is like it's nothing. There's nothing there, So that was the reason it couldn't really work out. Anyway, moving on, and then after this, price moved down. We had a bearish move, price moved down at this point. And then what happened was, then the 30-minute candle started to close bullish. Now, the 30-minute candle starts to close bullish, and this was during the live streams, and I started to think that, okay, if it's starting to close bullish, and if the next candle starts to break the high, we have like a 40 pip range for price to move up, right? Makes sense because we've reached a support area, which we rejected before, and now there's a high probability for price to move up, so I executed buys. Now, if we look on the 15-minute here, how the 15-minute formed, so this one, okay, so this was the close of the 30-minute candle right over here on the 15-minute, right? So this was the last 15-minute candle. So if you look at this 15-minute candle, it basically opened and closed at the same level, which means that this 15-minute was a write-off. Now, as the next 15-minute candle started to form, this candle made a lower wick first, and then it starts to break its open high, which is where these buys were executed. Okay, so they're both the same. So I'm just going to do this right here, right? So this is where the buy was executed, and stop losses was kept below the current wick. And the whole idea was that, okay, if the 30-minute candle closed bullish and it has no wick at the bottom, because if you look on the 30-minute, it had no wick on the bottom, then there's a high probability for the next candle to move up towards 2384, right? So this was on the 15-minute. I'm not talking about what the bias is. I'm not talking about where price is most likely to head. I'm just talking about, we were following price action. So anyway, this didn't really work, and it was like a whatever, right? Lost the trade. Next one, continued moving. Now we're looking at the 15-minute, and we're coming down to this support area right here. So if we take a look at this 15-minute, this was the start of the 1 hour. Okay, then we dropped, and okay, so this was the close of the 1 hour candle right over here. If we only look at the 1 hour time frame, if we only look at the 1 hour, right? Looking at this 1 hour candle, once we're closing like this, you could say that, okay, if we break below this low, there's a high probability for price to move down. Make sense? Makes sense. There's a very high probability for price to move down if the next candle breaks below the low, because this is the ideal impulse entry scenario on the 1 hour time frame. Now, when we talk about the 1 hour time frame, there are a couple things in it. You got two 30-minute candles in it, so we got to investigate that. So looking at the 30-minute, this is what we see, right? Looking at the 30-minute, let me just bring this down over here right now. So once we're looking at the 30-minute, this is where you have candle that closed like this, right? And we move it like this. This 30-minute closing was the 1 hour candle closing. Now, the new 30-minute candle started. For the new 30-minute candle to start, it needs to break below the support, which is also the low of the 1 hour. You get me? So let me bring the gold over here on the 1 hour time frame so you have a better idea. Zoom in and look at this. Right here. So this low of the 1 hour is basically this support area. So we need a 30-minute candle to break below this support area to continue pushing down, to break and close below support area. And also, if you look at this 30-minute candle, this 30-minute candle has no wick at the bottom, which means we don't know whether the next candle will move up or down on the 30-minute, which also means on the 1 hour, we don't know whether we're going to break the low or not. Like, if we do, when we do break the low. So the next 30-minute, it forms bearish. Now we have this wick at the bottom, right? We have the wick at the bottom. We're running into London Open, there's volume at this time. So now we start to think that, okay, if the next 30-minute candle breaks below this low, then there's a higher probability we can continue pushing down, right? And then that's going to make the overall 1 hour candle push down. So if you look on the 30-minute, we broke below the low, candle moved down, no wick on the top, perfect scenario for price to push. And that was a trade right over here, this one right here. See, we broke below the low and then we moved down. Happy trade. And that, it moved about 20 pips, and after that it moved about another 23 pips. Like a lot of people in Discord took this trade. This one was it was a mistake. So we're not going to talk about that. There was a butterfinger. That was a butterfinger right there. So anyway, then the sell happened right over here. Let's take a look on this on the 15-minute time frame. Now, once we moved down, we started to consolidate. Okay, so look, we start to create support. Now there's so much volume. Look at this 15-minute candle. This candle fell 50 pips. There's so much volume, so you're forced to look at the small time frames. We start to create support, and we start to create some sort of a resistance. And someone said in the chat that this could be a good opportunity for a counter trend move, right? Because the trend is bearish, they're looking for a counter trend move. For a counter trend move to work, the next 15-minute candle needs to break above this high and then continue to push up. Make sense? This is also around pre-New York time, volume time. What happens with the next 15-minute candle? We break below the support, right? So now we were in a consolidation, we broke below the support. What's the probability for the next candle in volume time to continue bearish? There's a high probability. And then this is what happens right over here. And if you take a look at this chart, boom, boom, boom. Take a look at this trade. That was the trade. Kind of started, took a sell, stop loss was somewhere in the range over here, something we've talked about in the simulation on Saturday, so it worked out perfectly, right? Now this put us at like 600 up for something, 600 up for a day. And then so you can see how some patterns, they repeat themselves only when there's time of volume, only when there's volume time. Right now, this was a buy here. Let's talk about this right over here. So this was a buy here. So basically, we ran into your New York Open, New York session, and then we started to consolidate. You can see right here there was a rejection at this point. We moved to the left hand side, and we're following price action because we got the support, and the next candle forms like this. If you look for an impulse entry, measure this range, 18 pip range. What do you do? Nothing. We move up. This candle needs to break above this high. Nothing's happening. Now we formed a solid resistance here. So we're just following price action. This is something what I do when I come home and just look at price every 15 minutes. Literally every 15 minutes. I'm looking to see how the candle's closing. Boom, close like this. Nothing to do. This closed strong bullish. I'm like, okay, well, big rejection. Closing strong bullish. If the next one breaks above the high, what's the probability that price can continue to push up? We got range, 41, 42 pip range. This is like a minor resistance because it doesn't even exist on any other time frame. So this is 44. pip, and then like, once the candle here, oh wow, damn, it's still moving down. So when the next candle, start to break above the high, took the buy, price moved up, whatever, got like 25 pips. So when we're talking about this range here to the left hand side, this is what we got. You see right here, you measure this from here, it's like a 41, 50 pip range. Like if you look on the 30-minute, I know it doesn't seem much, but if you look at it from this resistance all the way, even till we break above the high, this is like 34, 35 pips. Pretty nice, decent range here. And now, man, we're just dropping over here. See what's going on. Even on the 15-minute, there was no confirmation. I guess this candle closed below, but then you can argue there's like 1, 2, 3, 4, 5 candles coming down. Even on the 30-minute, we've dropped like 69, 70 pips. And then you ask yourself, okay, how much can we more drop? This shit drops another like 45 to 50 pips, so hopefully this helps. Most trades were very simple, impulse entries or waiting for the candles to close. These things over time, you get more experience in it. But anyway, we'll see you tomorrow.